And then we also got to learn about some of the possible opportunities that we can take on the market. But before we do all that, I want to learn about how Victor got into the stock market. So, Victor, how did you get into the market? What brought you to this field? %. I mean, I come from a day trader's perspective, as we were talking about a little bit off stream just now, and you come from a more investor's perspective. Obviously, everyone wants to eventually move to that cycle. You can't be high octane day trading all day and continue doing that at the older ages too. You just get slower. So that's part of the reason why I'm so happy to have met you on a previously known platform known as stonks.com. Rest in peace to that platform. But I'm so glad to have met people like you on that platform who have different perspectives, because we have also met a couple people with the crypto perspective, Alpha Exchange, and so on. I plan to bring him on to the stream one day too to talk about crypto. But I've heard you mention about getting into crypto. How do you feel about Bitcoin, its utility? What do you think about its future? Do you think it's gonna go to that prices Kathy Wood predicts goods goes to, or do you have a different opinion on it?
Well, let me give it to you. So I I left accounting and got into the software industry about 25 years ago. And the reason for it was that I kind of saw that the software space was more valuable, lucrative, interesting, and
Okay.
software was interesting to me back in my college days. Now, so I became immersed in the digital world that helped e-commerce companies implement software systems, logistics, and so forth. So from where did the world evolve from the time that 30 years ago to now? Everything's digital, and I'm getting around to Bitcoin. I'm getting there. But so as I heard about Bitcoin and digital currencies, on the surface, it makes a lot of sense, right? We're in a fully digital world, right? I buy stuff from Amazon. My wife changed the family Amazon password. That's a monumental event, by the way. That's like, oh man, we have two sons, myself and she had to like, put out a memo to the family. Hey, the Amazon password is changing. And that's just kind of a way of showing that we're completely digital in 90% of our lives, right? I go to the ATM like, I don't know, once a month, once every 2 months now. Rarely, I don't deal with cash. I don't deal with fiat currency. So back to Bitcoin. Bitcoin makes total sense because if you think about the history of gold or even paper currency, it was developed thousands of years ago to pay each other, to represent an economic measure of value. Hey, I grew these crops, and you got to reward me as something else. Currency was used. Okay, great. But that's a fiat currency. I mean, we've been using fiat currencies in a digital format for a long time. Visa makes 3% of all these transactions because they have a platform that in the 60s they developed, and they were able to create a 600 billion market cap business by just making it easy for us to transact with one another. Well, that's going to go away. In my world of the future, Visa's gone, MasterCard's gone, American Express is gone. Why? We should have digital currencies for everything. They should represent things across the board. So I've been buying Bitcoin since 2018. I'm a hodler. My friends that are crypto purists would correct me. I would say I'm a holder because I hold stocks, I hold real estate, but I'm a hodler of BTC, according to them.
I love it.
So if there's any crypto guys out there, feel free to laugh. Now, where's the future going to be is I think that digital currencies are going to represent a unit of measure. For example, the oil industry is developing a unit of measure for a barrel of oil. So if a Saudi Arabian company sells it to a Colombian company, it's represented by a digital unit of measure of a barrel of oil. Makes total sense. Why do you get your fiat currencies into the mix? It just makes, if anything, the mathematics a lot more complex. A barrel of oil is a barrel of oil is a barrel of oil. So those kinds of use cases are really exciting. I own BTC. I own Ethereum. I'm in one liquidity pool and continue to expand my knowledge of it, but not as fast as like stocks are second nature to me. Real estate's second nature to me. Bitcoin is like, man, I got to unplug my brain and plug it back in sometimes because it's so futuristic.
Yeah. No, I get that 100%. I kind of lose myself in the cryptocurrency world. I used to own cryptocurrencies back when 2021 started happening, and then on this rise up, I kind of just cashed out of everything, and I said thank you for that run up. But after that, even with stocks, I bought a lot of stocks like Apple, Google, Microsoft, and all of that back when they fell down during the COVID. And then after they ran up from the COVID boom, I said thank you, and I got out from all of those. But now I'm kind of being upset of not buying more on the most recent August dip because I thought the most recent August dip could go much lower. So I'm a little upset for not being able to capitalize on that run up till now. But I know you have interesting thoughts about potential market correction. So what do you think about that for the next few months, next few years?
Yeah, so I think the market, has been surprising to the upside. Now, I think the market's expensive. The market, and I guess we could have a solid argument about, oh, well, it's not really that expensive, but I don't think anybody's going to argue that, hey, after 2 years of appreciating prices at a very strong rate of appreciation, we could agree that the market's expensive. How expensive? That's where the debate begins. Now, having said that, we have this election coming up in the United States that is got a lot of attention. And
Mhm.
I label it as it's just one more big source of fear and anxiety and uncertainty and who's going to win and how are they going to win and all kinds of good stuff. And we're like in we're like in the opening act of how fearful that's going to get as we approach the election. I imagine there's going to be just more stress and it's going to get more intense. Now, we had a very good week of appreciating stock prices. I was humbled on Thursday. My expectation was the Fed reduces 50 basis points and we acknowledge that the economy is slowing down. We're going to have a sell off. That was my expectation. To my humble surprise, we rallied more than 2% on the NASDAQ,
It
like
was
2.5.
insane.
I
Yeah.
had I looked at my portfolio and said, I looked up and I said, thank you, universe, for all that money. I don't know how the heck the market could go up on a day like this, but I'll take it. And coming up this week, if I had to bet $1, are we going to be up? Are we going to be down? I would not be surprised if we're down 2% this week, because just as I look at the market, it's not going to be smooth for the next 6 weeks. No way. If it is, then I will again humbly accept appreciating stock prices, but it would be an absolute surprise.
With that in mind, are you looking to take profits on some of your positions, or are you still planning to hold your positions, which we can obviously get deeper into if you feel like showing your portfolio,
Sure.
or maybe I'll actually direct people to go to your stream every morning, 9 a.m. On Victor H Investing on YouTube, where he talks about his portfolios, what he's short, what he's holding, what he's actually thinking about getting more long. So head over to his stream and hit the subscribe over there too at Victor H Investing on YouTube.
Yeah, thank you. So I've got 10 attendees on my stream, by the way. So thanks everybody for joining. And I hope to be streaming with Prad because I get a lot out of just talking to him. And I think that I hope that investors that are long-term investors are open to listening to traders so that we could kind of get a better sense of momentum and a better sense of how things move in a particular day or a week. Back to, am I selling certain things? The answer is yes. How do I go about it? Now, I have about 35 stocks. My biggest stock is Meta. I own like $240,000 of Meta. And then my least, valuable stock is this company called YOU. I've got like $2,000 in that software company that does security. Really neat little company. Now, what I've been doing is, I want a little more cash. So I pretty much torture the data until it confesses. I torture each valuation, like, what did I miss? Where is this company going to bite me? Where is this company going to sell off? And I tortured Robinhood today, tortured it, beat it. I beat it and beat it. And it ended up looking better than when I started beating on it. And I'm going to hold Robinhood. And Robinhood's an 80% gainer over a year and a half. I love their strategy. And okay, I'm holding it. But as I go through my portfolio, I'm trying to find a weak link and getting it out of the portfolio. I don't have to pay any money to watch a stock, but I pay a pretty expensive lesson if I watch a stock go down. I was an Intel stockholder up until recently. And let me tell you, that was abuse of stockholders, in my opinion. And I hate having stocks that surprise me like that. So I'm beating up my stocks, trying to see, okay, which ones are the weakest ones, get that out, put it in cash. I'm not expecting like a 2022 correction. That was a real long, painful correction, man. It was like, holy smokes, how long is this thing going to last? Not expecting that, but I am expecting, for example, we had in August and what we had in September, where you have, especially some sectors really sold off nicely. That's what I'm expecting. Some of that action, and then I can kind of reallocate some capital into companies that want to keep growing. I beat up Meta. I put a video out on my channel, and I was beating it up thinking, should I take some money off the table on Meta? And I beat it up and I tortured it. And I ended up thinking, you know what, I'm going to buy more Meta. It's the best horse that I've got to bet on that has
so
an
strong.
AI play, has phenomenal businesses, generates cash. Like, man, it should be illegal. Meta makes drug cartels look like they don't know what they're doing. They really don't. You want to create cash, you go social apps, and then that's real addiction. That's real addiction. That's real global. It's such a phenomenal business. All kidding aside, and you look at the domination that, you know, Meta has, it's just really, really impressive.
Yeah, for sure. It's been one of those strongest Magnificent Seven. As a day trader, I've been watching it, tracking it, trading it. It's been awesome opportunities. Just can't talk enough about Meta. But when it comes to investing into Meta, I kind of always hesitate a little bit because the prices are always so much higher than when I previously was looking. I'm like, okay, maybe I'll wait for a pullback. And when the pullback comes, I'm like, maybe I'll wait for a deeper pullback. So how do you combat that battle of timing the stock on a pullback?
So on that moment, right? Okay. So I advise my two sons. I have a 24-year-old and a 20-year-old, and they're great young men. They're pursuing their education still, and if I were consulting them on what's kind of, to me, you know, my point of view, what's an obvious opportunity, like Meta was an obvious opportunity 2 years ago, and that is Alphabet. Alphabet, Google has not risen with the same trajectory as Meta or Nvidia, and like Tesla, man. Tesla is an ulcer kit. That's what you get. You get stock in Tesla, and you get a starter kit to get ulcers. And I don't own Tesla.
Stressful.
But you look at Alphabet's business, how strong and powerful it is, and you look at how strategically, if this AI thing becomes a thing, it's like, okay, they got a front row seat. They have a business that is as good as anybody's, and I would say stronger than anybody else's. They've got Gemini. They've got the large language model infrastructure down. They've got a cloud business that's growing faster than the other hyperscalers. They got a search business that's second to none, and it just keeps generating cash. They make drug cartels look like amateurs. It's really a phenomenal business that hasn't risen as quickly as the other Magnificent Seven stocks over the last 2 years. There's some storylines that maybe have hindered their growth. For example, they did not jump headfirst into like the AI craze that ChatGPT caused a year ago.
Right.
And they've been kind of careful with that. Now, when you look at their self-driving robotaxi business, Waymo, that's a real deal. That's real. They've been doing it for 10 plus years. They have cars driving in the United States. And I don't know if they are up in Canada yet, but they are already in, I think, 4 or 6 major cities where these cars pick people up and get them from point A to point B with no human inside the vehicle. All automation, all AI. That's real. So that's an example of how Alphabet has an advantage, and nobody else is that far along. Alphabet's leading the charge there. They've made a partnership with Uber for 2 cities. They're doing their own thing in San Francisco, Los Angeles, and Phoenix. But you could see them forming more alliances to pretty much provide it as kind of a platform. So the next, I think, mover, a big market cap mover, is Google. And I'm buying more Google shares. I've been buying more Google shares. It could take a little while, but I would not be surprised if when we're streaming 5 years from now, Prad, when we're streaming together, and I would
We're
not
come back to this conversation. Exactly.
We can come back to it, and I would be surprised if Google was not at least twice its current value in stock price. And I would not be surprised if it was 3x or 4x in 5 years.
some people viewed the DOJ, I believe it was the DOJ's ruling that they were going to split apart Google's monopoly. But when I actually read a lot of articles about it, articles said, it's actually a good thing because Google is valued at a much less valuation than all of its components combined together. So if they were to get split up and have their own separate tickers or whatever, it would still be giving Google a much higher valuation as a combination. How do you see that playing out?
So the Department of Justice voiced an opinion. They didn't say you have to break them apart. They just voiced an
Not
opinion
yet, yeah.
that, hey, we
Yeah.
deem you to be a monopoly. You've been so good at search. You're so good that you have dominated that space. So that's what they said was the case. Now we have a very good example that happened, I guess it's 25 years ago with Microsoft. Microsoft, similar scenario. And Microsoft was deemed to be a monopoly. Yes, they were the best because they got there through innovation, timing, and all kinds of good stuff. And they were, I'm a big fan of Microsoft. Okay. So I'm not bad mouthing them just to bad mouth them, but they were doing some things that were over the line. Netscape was the original browser business. And I don't know if you recall that or heard about that.
I've heard about Netscape.
You're
before.
fairly
Never
young.
Used it before though. Yeah.
Some young dude, man, in the 90s. This is blows your mind. It's kind of like Zuckerberg, right? He started Facebook when he was 18, 19. Just how not possible for me to understand that. But some guy created Netscape, which was the first mainstream browser, and he would charge basically, it was like $100, per seat per user. Microsoft saw that as a big threat, so they came out with their browser and they gave it away for free. And they actually forced PC manufacturers to only install their browser, so they used their dominance illegally. And they were that was unfair to Netscape, and they put Netscape out of business. That was what Microsoft did back then. So put that kind of just in context. Microsoft was never broken up. They had to adjust. They had to appease the authorities and so forth. So Google Alphabet's smart. They're going to say, okay, what do you don't want us to do? What do you want us to do? And they'll be like, well, you got to allow your competition, enough room to compete against you. Sure. We were a search business when there was 20 search engines ahead of us, and we fair and square beat them all.
But buried them.
I guess anybody who's unwise enough to start a search business against Google can go ahead and do that. It's like, why would you do that? But I think how long is the Department of Justice going to hang on to this thing? 10 years. How will they be satisfied if Google shows that, we've made the environment conducive to innovators come into the market? We're not taking advantage of consumers. We're not taking advantage of businesses. And I think that the DOJ issue, in my mind, doesn't have a lot of negative effect on the company nor the stock.
That's about the same view that I had, because even if it does make even if they do make the company split apart, this is going to be beneficial for them in terms of value anyways.
Let me share a comment from one of my viewers. Fallsgrave said, when Standard Oil, the original monopoly, was broken apart, Rockefeller became more wealthy. So the government said, hey, you're not wealthy enough. We want to make you even richer and grander. But it's funny because one of the qualitative aspects of looking at stocks, and I just call it out because I might as well just be honest with my viewers and the community that I operate with. I look for businesses that resemble a monopoly. Okay. I grew up playing Monopoly. Okay. I look for businesses that resemble a monopoly. So when the Department of Justice said, hey, Google, you're a monopoly, I think I was like, yeah, anything else? Anything else you want to update us on? Of course they're a monopoly, but they got there the right way, which was through innovation. They got there by doing it better than anybody else. And there's no rule in capitalism when they're like, oh, you're not supposed to try. You're not supposed to win 20 championships in a row. No, if you have the talent and you do it the right ways, you follow the rules, you can win 20 championships and you become the
Right.
New York Yankees, or you become the whatever, iconic sports franchise you want to use. So I think that it's a story, most definitely. It's going to be a little more administrative efforts that Google will have to put themselves through, but I don't think it's going to be a significant headwind for them.
All right, so yeah, that's good to hear exactly because I'm getting ready to buy some Google. Can't wait for Meta to pull back, but that's for a whole different topic. I want to quickly go through some of the stocks over here that are setting up for this week on their earnings reports and see what you think about these stocks. So let me just quickly share my screen with you over here. Boom, and you should be able to see the screen. Let me know if you can.
I can see it.
All right, awesome. So this week coming up, we got a couple stocks reporting earnings. The main ones that stand out to me is Micron, Costco, and I'm sure you've heard me giving a really big
Yeah.
rant about BlackBerry recently. So what do you think about these three companies that are coming up soon?
So Micron, when I look at the financials for Micron, it kind of, the stock price has been going vertically up, and not recently. It's been coming down quite a bit. But if you look at the revenue, it tells a different story, which is there's a lot of revenue loss. So I don't know what to think about Micron. I don't have a clear sense of how investors are valuing that stock. So that's one that is too strange for me to try to get my head around. The other two I have better comments on.
Okay, so let's head over to Costco.
So Costco, holy smokes, man. How does a retail business become this valuable? And I've never, how you're kind of on the outside looking in on Meta. I'm on the outside looking in on Costco. It's like, it's a freaking retailer, people. I go to Costco. It's no frills shopping. You go in, you get out. They have margins that are razor thin, but they make it work. And the valuation of this company is super high. Now, for the last 10 years, I've been telling myself, well, there's going to be a day of reckoning with Costco. They're going to stop growing and then investors are going to flee. I don't think that's going to happen. They just continue to just rise in value. And I don't see it changing. I don't see it changing next week.
Yeah, Costco has been absolutely crazy, almost breaking all-time highs again, going into $1,000 incoming very soon at this point. When do they stock split? That's what I'm waiting for. Eventually, this stock has to stock split. We've got every single major $1,000 name stock split so far, so I'm just patiently waiting for this one. The next stock was, if I remember correctly, was BlackBerry. Now, this one is no longer an investment, but how do you feel about BlackBerry after their overall history of being in the market, being a cellular device, and so on?
Yeah, so I think so. In today, as an investor, BlackBerry is interesting because they do continue to have a royalty business where they really do have very good security technologies that they license out to other companies. And they acquired a security software company, and they are operating that software company now. So they're trying to build themselves up. So BlackBerry is a case study that I totally got my head around. In their dominance, they had 80% plus market share of the smartphone market before Apple, before Android. And they just didn't see how a tablet based phone was going to dominate. But in their heyday, they were above $300 billion in valuation back when $100 billion was a lot of money. They were one of the original, super mega caps. And then the business left them so fast. It was like, oh my God, I can't believe people moved on. But speaking for myself, I had a BlackBerry and you couldn't leave home without it. And right now you don't leave home without your phone. And
Yeah.
And the iPhone was cool. The original, discussion was, well, the iPhone's a toy and the BlackBerry's a tool, and you use BlackBerry for work and all that stuff. But obviously, that's how the West was lost. iPhone became dominant. But kind of like the players that are in kind of like incognito, is our friends over at Alphabet. Guess what they did? They created an operating system that runs on a majority of smartphones. It's called Android. An Android operating system runs on Samsung, Huawei, runs on everything non-Apple. Apple has its own iOS. So our friends at Apple are very entrenched in the smartphone market and will be players in that market because of their operating system. BlackBerry, I think, is interesting. You could probably buy it at a discount, but I don't know that they'll ever capture the momentum and the dominance that they once had. It'll be very difficult, but it is an interesting company for me to take a look at.
I have a interesting tweet, or not a tweet, but I guess it's a bunch of tweets put together in an Instagram post for you to take a look at. This is basically something talking about history. So apparently the Fed, obviously we know, kicked off a 50 basis point rate cut. This is only the third time in recent history that the Fed has started rate cuts with 50 beeps cut. And the last two times were 2007 and 2001, and both times market tumbled down 31% and 26% respectively for about a 2-year period. And the third time we did a 50 beeps rate cut was obviously most recent one in 2024, September 18th. So, the dates line up too. The dates absolutely line up because that's when the FOMC dates are. September 18th, 2007, they had a 50 beeps rate cut. 2008 happened. September 18, 2004, we get a 50 beeps rate cut. Does that indicate 2025 to be somewhat of a historical repetition? Or does the Fed actually have this somewhat in control, as they're saying that, hey, we were in recession those years, and that's why those big moves happened. We're not in recession now. The economy is doing better, so we're not going to go into a big tumble like that like before. So this was pretty interesting.
Why they went 50 instead of 25? I mean, you've been strangling inflation for the last 2 years, right? They drove interest rates sky high compared to 2021, and then for them to kick off with a 50 basis point cut, it's like, was a surprise. It's like, now there's a saying, right? In some cases you don't listen to a person speak, you watch their feet and you watch their behavior in action.
Yeah.
And I'm still not convinced the Fed's telling us everything there is to know. I think that the economy is in worse shape than it really is. I think the data supports that, we're just not doing as well as we were doing before. And now we're going to be a little bit slower. But we haven't been in an overly high growth environment. If you think about the last 4 years, right, we had this COVID pandemic, which was, holy smokes. It drove the economy in some industries, through the ground. And so you look at the last 4 years, we haven't been on any economic cycle that really is great. A lot of the stimulation of the economy is showing up in numbers, but the companies themselves are not firing on all 8 cylinders. So now let's think about 2025. If we have any kind of increase in unemployment moves up fast. That's the signal that I'm keeping an eye on to tell me what the economy is doing. And I think there could be a pretty good sell-off in 2025 if the right or the wrong planets aligned. Like, hey, unemployment's gone up, and you'll then see that the Fed was seeing some other signs that they didn't tell us, and we're like, hey, we just decided to start with 50 basis points after being so hawkish for 2 years. We decided, hey, let's be dovish. That doesn't make any sense to me. They should have started with 25 and kind of eased into it if the economy's doing fine.
At the moment, it looks like the next FOMC, which is on the 7th of November 2024, is already being priced in at about 51% probability to get another 50 beeps rate cut. And we have 49% probability to get a 25 beeps rate cut. So the probability calculators here are already looking at a 50 beeps for the next one in November.
Yeah, man, it's interesting to be an investor, man. I'll see how it plays out. But those are big moves. Those are big, massive moves. And again, I'm going to look at the Fed's feet and look at their behavior as opposed to the pretty words that they say during speeches.
If you don't mind me running through some of the stocks over here, I'm gonna quickly talk about some stocks over here that are on the watch list for the coming week up ahead. Starting with stocks, the Palantir, Dell, which were included on my which were included on the S&P 500 over Friday. So starting Monday morning, which is tomorrow, they'll be in the S&P 500. Then I have a bunch of other stocks here, such as FDX, Nike, Affirm, Apple, Meta, and so on. I'm going to look at them as a day trader's perspective, and maybe you can chime in as an investor's perspective, starting with Palantir. So, looking at Palantir's most recent run up, and something that I have seen in the past, any stock that gets added to the S&P 500 index, for example, Tesla back in 2020 was getting added. I think it was in December of 2020. After Tesla got finished getting added to the S&P 500 index, it had a big sell-off as a day trader for you to take advantage in. And this happened in Uber also. Uber most recently got added to the S&P 500 index. The very next day, Uber sold off for a monster short opportunity, and that played out for almost a week straight. If you were looking for that maybe swing trade opportunity in there. So looking for history to repeat itself over here, I want to see some fail pops around this $37.35 on Palantir off the open tomorrow for us to possibly look for an opportunity to ride that short back to the downside. I think Palantir could easily go test this 35 area where we've been finding some support. And once we give up this $35 area, not able to stay above 35, will actually open up much more room to the downside where we can look for a swing trade opportunity or even a investment for the short side, which is where Victor can come in and chime for his position.
Yeah, I'm shorting Palantir. I started to short it, let's call it a week and a half ago. And I actually have a fair price on the stock of $12 per share if I measure their free cash flows and I look at their earnings per share. The thing about Palantir is they're not a super high growth company. They're growing at 20%. And frankly, that's just blah. I mean, Meta's growing at 20% and they're like 10 times bigger, if not 20 times bigger. So when you're growing at 20%, but you're being valued like you're growing at 100%, it's a big opportunity for me to short a stock and see if I can make 10, 20, 30% over the next couple months.
Yeah, so here's the numbers that Victor was talking about. They're growing at the same rate as Meta, as he just mentioned, and their PE ratio is, if I remember, a ridiculous number in 120s or something. 218, sorry, PE 218 right now. So if you were just to look at that number, you can see the smile on Victor's face, looking great.
Again, if they were at 100% growth rate, hey, go for it. That P is fine, but when you're growing at 20%, hey, where's the beef?
Yeah. Next one over here that I want to take a look at. What do you think about FDX? They had a big downfall off their earnings report. This is a company that makes like what, $20 a year on earnings per share. They reported 360 over here. So if you just times that by 4, you have $18 to $20 basically coming in on EPS. They guided lower. They moved back into exactly the previous earnings day high. So they basically closed the gap. And if you remember the previous earnings report that actually took the stock all the way to the upside, we were looking at a move into all-time high of $320, but that move never really came into play. And this most recent earnings report taking it right back to the downside. Does this mean that FedEx possibly could bleed a little bit more? Or does FedEx, whose PE is only 12, I think, if I remember correctly, right? PE is 15.71, forward PE of 10.89. They're still growing on a year-to-year scale, just not at the rate that they previously were expecting. Is this a company that you would look to start buying or dollar cost averaging into?
No, because I think FedEx really benefited from supply chain demand a couple years ago, and they've become a bigger organization overall. But when I looked at them very closely this past week after the big correction, it really shows that their revenue declined in the most recent quarter. In the trailing 12 months, you have a decline in revenue. Now, what story is out there that's going to help FedEx get bigger? Well, Amazon's delivering their own packages. Well, that's a big problem. And then is the economy hitting on all 8 cylinders? No, we're actually seeing a slight contraction. So I think there's stories that are going to keep the stock from growing, and potentially you're going to see this growth rate continue to, the trajectory would be a negative trajectory. I think the stock is probably overvalued by 30-40%. And there's no exciting story that says, hey, this stock should be worth more, because in 2025, this exciting tailwind is going to show up. Or in 2026, this exciting new business is going to show up. There's really nothing there. So I looked at FedEx, and, I'm a pass on FedEx. It's like, there's nothing there. There's nothing exciting. I could wake up 5 years from now. One of the things that I look at a stock is, I want to believe that in 5 years, a stock is going to double. That's what I want to believe. There's no way I can come close to believing that for FedEx. I could wake up 5 years from now and it's worth 30% less. And that's exactly what I don't want.
Yeah, I agree with that competition from Amazon. Amazon obviously 90%, maybe not 90 would be a ridiculous number, but more than 50% of the world probably buys from Amazon. And if they're doing their own deliveries, then that's a lot of deliveries not going through UPS, not going through FDX and so on. So I agree with that mentality very, very much. The next stock I want to scratch your brain with over here is one that had CEO change. Okay, we got a NKE lover over here. I'm guessing you own Nike on your portfolio.
Well, I started buying into Nike when it started to get. I mean, look at this chart, right? We're talking about the #1 sports shoe company on the planet, dominant. I like dominant companies. It's going to be like a broken record over here. So Nike, the second place shoe company, is so far behind these guys. So they started being sold off, and I started buying them earlier in the year. Now, that investment started to look kind of bad because they had additional drops in the stock price. So I continued to evaluate the company, and I would double down. I'm owning, how much do I own of Nike? So the news of a new CEO, I think investors recognize, okay, we're dealing with Nike here. They became the dominant player, not because they're a terrible company, no, because they outperformed everybody. They had the best shoes. They had the best athletes representing their shoes. The swoosh is one of the most recognizable and valuable brands on the planet. And now they're going to have a refresh on the management suite. I'm really excited about that. But overall, I was still buying into Nike. Every down day I was buying into Nike. So it was a little bit of a party when the stock popped, because I was like, yes, all right. It's going in the right direction, and I made a little money.
Awesome. I want to show you this in that case. The most recent Nike CEO's history with Nike, in case those of you have not seen. Starting off with an intern. Let me just click on that screen for the stream over there. Starting off at the intern position in 1988. Did that for 2 years. Sales position for a year. Team sales for 3 years, and basically sticking with them all the way through to the point where he is now the president and the CEO. Now that's what you want to see from somebody who became the CEO, who's in power of a company that he has stuck with for so long of his life, starting at the bottom, and now he's here like the Drake's lyrics. So literally doing it, putting the American dream to work over there. And obviously a lot of people that I know a buddy who resells shoes with Nike shoes and so on. He's a big Nike fan, and as soon as that report came out, he was so ecstatic with it. He was happy. He's saying the resurgence of Nike, because Adidas did kind of come over and take over with the Kanye shoes and so on for a little bit, but now the Nike comeback, he calls it the Nike comeback. I love it.
So okay, man, I'm not the most superstitious guy, but I could tell you. So the evening that I heard about the news, I was wearing a pair of Adidas, and I just took one of my Adidas off, and I got to take the other one off because I took them off. And next thing you know, I hear a press release that Nike had a new CEO and the stock popped, and I made a couple grand. So I'm like, all right, I cannot put a pair of Adidas on for the rest of the evening. And I put a pair of Nikes on. So I just took my shoes off, buddy, because I don't want to jinx myself.
That's awesome. That's awesome. Yeah, usually I'm not a superstitious guy too, but I do have a couple rituals here and there that I feel like I have to repeat right before my trading day. But it's not like I have a bad day if I don't do it. It just stays in my mind like, oh, I didn't do it. I didn't do it. But yeah, that's a hilarious over there. I want to head over to the next one. Which was, I believe, Apple. Apple, I know you got a little short position over there. They got bought into the S&P 5. No, actually, they got sold into the S&P 500 rebalance because I was watching the rebalance take place. They were selling 7 billion shares of Apple on that day, and you can see that volume candle. Look at that volume spike. 318 million shares on Apple sold going into the close. And that is, let me just turn off all my indicators. Look at that sell-off candle into the close. Now that is basically the S&P 500 saying we're selling off $7 billion worth of Apple.
Man.
Now isn't that happy for you? I know
Well,
you're happy watching
the
that
biggest
move.
news, I think the biggest news that, everybody's really keeping an eye on is the new iPhone sales, right? And is that iPhone going to sell? If it doesn't, it's going to rain pain on Apple. And I expect that, frankly, Apple does not overwhelm me with innovation and ideas. They underwhelm me. It's like, guys, you're worth more than 3 trillion. You should be like landing, a manned mission on Mars. You should be doing stuff that's freaking ridiculous, like Microsoft, like Google, who has cars driving themselves. You put passengers in the back, and you got robo taxis, and you got Meta doing Meta AI. I don't know if you've tried that. It's phenomenal. It's awesome. They got 3 billion people log into their apps. And then you go Apple and you go, oh, you got a smartphone, and you got Huawei trying to kick your butt coming out of China, selling a device that's almost as good as yours. In some ways, the trifold looks even better. And I think they have a lot of competition. Having said that, I don't see, again, what's the story that's going to make Apple stock double in the next 5 years? I don't see it. What are the stories that lead me to believe that Apple is going to be worth 50% or less over the next 5 years? There's a lot of stories. There's a lot of stories that I could write, and they have a lot of facts, and they have a lot of trends that people would believe in.
Yeah, I mean, I agree with that. I'm not a big Apple guy at all. I'm actually a very anti-Apple guy because I'm a big Google guy. I've used Google phones all my life. I had the phones that were Google phones, but they weren't actually manufactured by Google, like the LG, the Nexus, and so on. So I go way back with Android culture. I did make a little bit of a betrayal, and I went to Samsung in between, but then I came right back to Google with the Pixels and so on. So I'm a big Google guy, so never been an Apple guy. But one thing I did recognize is they have the brand, but even the brand is dying down now. You don't see the lines as long as they used to be back in the day. People are not dying to get the latest iPhone like they previously were. So yeah, no innovation, no lack. They announced that they were going to get into cars, and then they said, you know what, we're backing out from that too. So everything they kind of stepped into recently, they just kind of pulled right back, and the market's just still been loving them no matter what. So I think once these numbers start coming out, we've already been seeing decline on the iPhones and a bunch of devices and so on. Once these numbers come out for the latest one, is just more sadness I'm expecting for this poor baby of the market, the ever so loved stock, the most valuable company in the public world.
And it's interesting. Like if you go like 15 years ago, the most valuable companies were the oil companies because oil prices were through the roof, right? But you look at the top 10 most valuable companies, 15 years ago, Apple was not even close to the top back then. Okay. It's been a total reset, right? So again, go forward 5-10 years. I think Apple would be one of the first ones that I would say they're not going to be on the top 5 most valuable companies in 10 years. They're just strategically, I don't see it. I see other players like Amazon they control how much of the commerce in the United States and globally. It's like, holy smokes, they're
I mean,
powerful. They're the number one
even AWS.
hyperscaler. The AWS is a hyperscaler cloud business.
Yeah.
They're the biggest and the baddest in that market. They created that market. Phenomenal, right? So they're creating such a powerful organization that, yeah, I could see those guys are going to be top 5 most valuable company in 5-10 years. Meta with 3 billion and counting users of their apps. Okay, you can put them in there, and you can put certain companies in there, but Apple lacks. They're so vulnerable. I just think they're vulnerable. I think the story is going to get pretty ugly. Of course, these are all stories that'll take time. I don't know if it's going to take 2 months, 2 years, but I would say this company is going to go down at some point.
I love it. I love to hear that more, because I got a bear right here. I don't know if you can see it. The light's pretty much blinding it out. So I'm a bear at heart. Not that I want to see the market crumble all the time, but I just like watching the stocks go down because I'm a better short seller than I am a long goer in an intraday position to mindset. I love the bull over there.
And you're dealing with a bull over here, buddy, but we can get along. We can get along. We're friends.
Exactly. No, I love it. The next few stocks are kind of in the semiconductor sector. So Nvidia, Micron, TSM, Intel. I know you previously used to own Intel and they kind of went down, but most recently Intel had a positive catalyst. I'm going to put positive catalyst in quotes. The positive catalyst was Qualcomm approached them to potentially buy them out.
Yeah, I mean, that's kind of definitely a game changer for the stock price, because it looks like, somebody's going to come in. An adult is going to take over. And their current management team is like, guys, you couldn't have done a worse job. So maybe investors are so relieved that, the Qualcomm management team has been doing a pretty decent job. So that combined company may do something. I'm a Qualcomm stockholder, and the Qualcomm stock went down.
Yeah, usually does. Usually when the acquirer announces that the acquirer goes down and the stock that's possibly getting bought up goes up, and but it recorrected itself, I think, right?
Not yet, but
no?
the story on Intel, it's just a bag of problems. And you know what? I don't want a bag of problems. I want a company that has momentum, or I believe in the rebound. I don't try to buy too many rebounds, because sometimes, you just got to acknowledge they went down for a reason, right? Now, Intel, they've been trying to rebound for 3 years, and NVIDIA has stole the show in semiconductor, and they deserve it. They were in the right space. They have the best technology for GPUs. TSM, NVIDIA is overpriced. I'm shorting that stock. TSM is, and I'd love for you to show NVIDIA and show the last 3 months and see that the stock really isn't going anywhere. Okay. So not the only crazy man on YouTube saying NVIDIA may be priced too high. There's a lot of investors that are getting out of this, and some super investors are selling out of NVIDIA saying, hey, you know what? I'm taking the gain and moving on. So NVIDIA, in my opinion, is overpriced. TSM is very overpriced. Why the hell is TSM priced so high? Their revenues have been going down, and they're not the ones that own the IP. They just manufacture. They're the foundry. They manufacture for NVIDIA. They manufacture for Qualcomm. They manufacture for Broadcom. Now, if your stock price is up 80%, show me some growth, but they can't show you growth. So that's my big problem with TSM. I'm not doing anything with TSM, and FYI, I owned TSM for years. I tripled my money on TSM, sold it toward the end of 2021. So I think the company's a good business. I believed in it. I invested in it. I had pretty good balance of stock, over $100,000 in TSM. Then I sold it, moved on. Haven't been in that position ever since.
Okay, yeah. So overall, I'm guessing a little bearish on the semiconductor sector. Most of them, I feel, have been run up too much, too quick, and now what else is really left for them? The main king of the sector, I guess, was obviously Nvidia, and if that one's stalling out, I'm expecting the rest of them to stall out. You already had the the crazy story behind SMCI, their 10K filings, their possible CEO fraud. This one ran up, but this is a hardware
Oof.
company, and hardware, Victor could possibly chime in about hardware versus software. A hardware company never deserves to be this highly valuated, especially when you know that the CEO has history of fraud behind the company and so on. This one pulled back pretty hard with the whole AI sector. So as we are seeing the cooling down in the AI semiconductor sector come into play, I also, as an intraday trader, I'm looking for the short side. So it's good to see that someone who is a more longer perspective investing mindset is also looking for a pullback on some of these stocks. Now, guys, listen, that doesn't mean you just go out there and just short every single stock that you find willy-nilly, right? You got to time it properly. For me, it's timing is a lot more important because of a day trader, but for someone like Victor, it's something more like time in the market instead of timing the market. So understand the time scale that you're playing it on. If you're looking for more day trade position, maybe watch Apple tomorrow, maybe watch Palantir tomorrow. But if you're also looking for them as an investor, then obviously you heard Victor's opinions on how he's looking at these positions, how he's looking at the overall market, which S&P 500, I mean, all at all-time highs. Like, what else can we really say about that besides that? If the market is not able to take out that Thursday's high, then there is simply no long in this market. That could very easily be the temporary top on the market, and then we can get a nice little correction. But if the market starts going above that Thursday high again, then we have some issues over here for the short side that you might want to be careful for. You might want to keep an eye out for some of the economic events coming out very soon. I think tomorrow we don't really have any major economic events that I'm taking a look at. I see. Oh, actually, we have the manufacturing PMI, S&P Global Manufacturing PMI. Do you look at any of these economic event numbers and follow them?
The big ones I do, and I don't think that one is going to move the needle. I think the one that I'm really looking at is unemployment. Unemployment's like really important. The growth, the GDP growth is also important. So there's some that I look at that are more important than others. The one thing that there's two things I'll share. One of them is on data, right? I would probably not get much of an argument from most people that there's probably too much information. It's like, holy smokes, man. If you took it all in, it's like, oh, it's so confusing and stuff. So I would encourage, any trader, any investor to kind of get your head around, what's your style and what information are you going to let into that box of thinking. So if anything, you need to be, disciplined on, I'm going to listen to these voices and this information, because there's 1,000 voices and 1,000 streams of information. It just becomes overwhelming. So that's one thing I would say. And then you had a segment just a minute ago that talked about, hey, markets can correct and so forth. And I would just remind everybody that, you got to build your internal fortitude. And what that means is make investments where if you lose the game, it's not the end of the world. And be ready to learn. Whether you make money or lose money, learn. If you lose money, you just paid for a lesson, but learn it. It's bad enough you lost money, but if you don't learn something, you just wasted all that money. If anything, you're paying for a lesson. And if you make money, it's easier to learn because you're like, oh man, how did I make that money? And so your internal fortitude, and it's not about like, hey, Intel lost me some money. I was still upset about it. It still was like, those jerks, they could have done a lot better. But it wasn't to the point where it hurt my portfolio, and I just moved on. And, so I would encourage everybody, like, no matter where you're at in your investing career, keep building that internal fortitude and always be ready to learn, whether you make money or lose money.
Yeah, I have a really good quote for that point where I think you were talking about earlier to learn, because if you don't learn, then what's the point of it, right? The quote goes, to to know and to not apply is to not know to begin with. So basically, if you learn the mistake from the market taught you a valuable lesson, but you go back and repeat the same mistake again and you didn't really learn from it, at the end of the day, you learn nothing because you're going out there repeating the same mistake. It's okay to lose. It's okay to take losses. Losses are a stepping stone to the right direction, but only if you learn from them and you get better. What's one thing that you possibly do to help you? Do you journal your trades? Do you track them by every single statistic out there? This is a short setup that I found over here. This is a long setup that I found over here, and then you track which setup gives you the most money or so on.
So I measure performance every month, right? I look at, my portfolio, and I try to focus in on companies that are doing well and doing poorly. In the middle probably doesn't get enough attention. But in that process, I think I've shared, my model on my streams. And that model is my creation, right? It's very numbers oriented, but in those numbers there's a story. Like the way I do my free cash flow forecast for a company, earnings per share, the growth rates, how I qualitatively assess a company. So when I look at performance, I look at the company. It was Uber better or worse than what I expected? Now, Uber outperformed my expectations. And Uber, if anything, at sometimes I felt like it's overpriced because it's just appreciating too fast. So, I just kind of hung on and said, even if I get a haircut on this thing, the management, or I should say the organization and the idea is so valuable. It keeps growing at such a high rate. I'm going to hang in there. So that's how I review a company. If their strategy is intact, and it surprises me because it's better or it's a little worse, but it's a little worse, but I see that, hey, the strategy is intact. Like Airbnb, the stock has suffered over the last 3 months. Their strategy is intact. I'm not selling any shares of my Airbnb stock. I truly believe that company is going to dominate. They're going to be the Nike, the Costco, the Starbucks, the Google Alphabet, the Meta of their space. They're just going to dominate because they have such an advantage of taking on privately owned residences around the world. So that's how I look at companies. I touch my portfolio every day. Maybe I miss a couple of days. Sometimes I go on vacation with my wife for a couple of weeks and I don't touch it. But other than that, this thing is pretty much a garden of stocks that I tend to, and I love tending to that garden.
I love it, man. A man with passion. I love hearing it. Hopefully, at your age, once I get there, I also am radiating with this much passion that you still carry on. I have a couple comments about your previously mentioned stock, Hood. I read an interesting comment recently. I don't know if you know about this change that the SEC approved starting November 2025. The minimum increment for a stock is no longer going to be 1 penny. It's going to be half a penny. So basically, it's going to be 0.005 bid, and then ask is probably going to say 101. So the minimum increments are going to be in half a penny increments and no longer 1 penny. This is actually going to help them mess with a lot of the HFTs that come in and disrupt the trading flows and so on. At least for the current time being, they expect it to cause some issues. But the article that I was reading said that this is potentially not a good sign for companies like Robinhood and another company that Robinhood actually works with. I think Virtue or something. I can't remember what the exact name was. Anyways, the Robinhood now will start making less money because the spreads are going to be tighter and way lower, and the amount of spread is just completely different game than what there used to be. So this person actually opened up a short position because of that. What do you think about that SEC change for Hood?
Yeah, I don't know enough about it to comment specifically on that change. The what I'm hanging my investment on is that they are dominating a part of the financial services space that was very fertile. And you think about, like, I grew up with brokerages like Charles Schwab, and
Mm.
E-Trade was all the craze 20 years ago. Like, oh, E-Trade. And so here's what happens in these industries that's interesting and it makes sense. So when I started trading, you paid basically $30 to get into a stock, $30 to get out.
If I
And
may, real quick, in Canada where I live, the banks charge you $7 in and $7 out. It is such a pain in the butt for us to do that. But thanks to Robinhood, we now have Robinhood clones in Canada, which we don't have to pay fees.
so it changes behavior, but let me kind of carry a stream of thought and then come back to Robinhood and why I believe in their
Yes,
overall
yes.
story. So it's $30 to get in, $30 to get out. Now, the brokerages built their business revenue streams based on that model. So did they want to innovate and break those models? No. They're like, why are we going to break? It's be like, uh, concert tickets cost $50, and you know what? We want to start charging 25. And it's like, well, why are you going to do that? Well, because in their case, everybody's going to go to the other concert because it's completely elastic demand. Now, so the traditional brokerages wouldn't move. So then E-Trade came in and go $7.95 a trade. And it was $7.95 to get in, and then it was still like $30 to get out. It was still expensive. And it really affected behavior, because if you knew there was $30 transaction fee, you're not buying $100 of shares. No, that make no sense. You're buying $1,000, $2,000, $5,000 transactions. So, the industry, the brokerage industry is just kind of humming along. We have all this innovation everywhere. My two sons, right, 24, 20, they've had a computer and they've had digital access since they were 2. Right. And really the younger one, probably since he was 1. Those guys, like, I grew up playing video games, upright cabinets, and I ended up creating a vintage arcade for myself a
Oh,
couple
that's
years back.
awesome.
Now, when my kids were like 10, I couldn't play video games with them. You know why? The freaking video games are so hard. I'm like, what the hell, man? Like, I gotta know 20 buttons on the keyboard,
Yeah,
and these
yeah,
kids are like freaking ninjas. They're killing
yeah.
me in 5 seconds. So the advancement of knowledge and so forth was just off the charts. So there we have the brokerage industry saying, hey, we're going to do it the way we've been doing it for the last 30 years because we want to preserve revenue until new players come into the market and they take away market share. Now, the part of market share that Robinhood's taking over is the younger investor. And they are like checkmating the traditional brokerages, because traditional brokerages are built with a paradigm of everything's tabular, everything's spreadsheet based, where Robinhood is about gamification and a different UI. That if you grew up playing video games, you get it. If you grew up with my generation and we were playing asteroids, we have a little spaceship flying around with one button, and then you have other generation, growing up with Counter-Strike or League of Legends and all this other stuff, Minecraft. It's a different society. It's a different generation of investors. And that's where Robinhood is dominating. And that generation keeps getting older and wealthier and bigger investors. They want to invest in crypto. They know, because they see their mom, dad, uncle, aunt, they accumulated wealth by investing in stocks, by investing in real estate. So they're like, hey, I want to be an investor. So my 20-year-old son, one of his buddies, great kid, and as well as my son, they watch my channel. And I'm sure a lot of the stuff's like way over their head, but just the behavior of them saving up and making bets. Like I put, my younger son, he started investing when he was 12. He started mining Bitcoin when he was 13 in his room. He's like way ahead of where I was. And I think that the investor that is 25 years old is leaps ahead of where my generation at 25 was. So back to Robinhood. Robinhood is catering to that part of the market. And the
Yeah.
older firms, Schwab, Fidelity, they're targeting me. They're targeting 60-year-olds. They're targeting 70-year-olds. And they're going to keep targeting there. But guess what? The 30-year-olds are going to turn 40. And guess who's going to keep growing? Robinhood.
Hmm.
Guess who's going to
Yeah.
have a contracting market? Schwab, Fidelity, all these traditional brokerages are feeling the pressure and they're consolidating. They're getting bigger because they need to survive. So back to Robinhood. That whole story, I believe that's the big story. That's why I think they're going to be worth twice as much over the next 5 years. Operationally, they generate free cash flow, they grow, and overall they're profitable. I acknowledge their most recent operational data is showing that they're having stagnant growth. I acknowledge that. It is a concern. That's why I beat up the stock today. I haven't released the video, but I beat it up and actually used, this is, I guess I'll tell you guys what's in the video. I used some of the AI tools to kind of do some of the analysis. I used Meta AI,
Okay.
ChatGPT, and Gemini just to see how much data those platforms could give me to do my valuations. And the video ended up kind of long, but I wanted to do it just to see, hey, what's out there? Is it another tool we can put in our bags where we can use ChatGPT or Meta AI or Gemini? And the results are
Have you
interesting.
have you tried including Grok into that test? I would make that video a little bit longer and add Grok. But Grok is basically a Twitter AI, which basically it uses all the tweets information. It takes all the Twitter news feed, all the Twitter tweeters informations and everything, and it does a completely sick job of reading earnings reports for me. It even generates pictures for me that I used in today's thumbnail and so on. So I would use Grok to add into that test. Make it a good hour-long video. I want to watch this hour-long AI video from Victor, how he is testing the possibilities of having AI help you create some sort of investment research, not an investment decision making, but an investment research tool. That's awesome. I personally use AI at the moment a lot in my life. I use it to make thumbnails. I use it to analyze earnings reports, analyze the sentiment analysis on Twitter for stocks and so on. So, AI is an amazing tool. If you don't start using it now, ladies and gentlemen, you're going to be falling behind in the world very, very quickly. So get ready for that shift. Uh, one thing is I wanted to get your opinion on over here was for small cap stocks. How do you look at small cap stocks? And after that, I have two last segments, which are going to be very quick segments, and we can call it. I know I've taken up a pretty long time of your day today, Victor. I appreciate that very, very much.
Okay, so I think small caps, it's almost like small caps are something you can really be proud of when you find a small cap that works, because they're harder to find and they can really explode. So they are kind of a passion. Now, the last 2 years, small caps have not performed in general. In general, they haven't performed. The big caps have taken a lot of the capital. I mean, the Magnificent Seven and Eli Lilly could be part of the Magnificent Eight or Magnificent
Mm-hmm.
10, right? Because if you put Nova in there, those have done really well. So the last 2 years have been kind of like big caps have had a lot of gravity and they've brought a lot of capital into those markets or those market caps. But some small caps, small caps can 2, 3, 4 bag very quickly. I have a list of small caps that I already invest in. I have some other small caps that I have on my watch list, but I'm being careful because for a while the small caps were doing nothing. For 18 months, some of them were just stuck, but they have great fundamentals. And you're like, what gives? Like, perfect example is Zoom. Zoom video. They're not setting any records. They're growing at like 7% to 10%. They generate cash like it's coming out of their ears. They're profitable. They're a mainstay, yet their valuation's like near zero. And it's like, why is that? They're already a $10 billion revenue company. The market just doesn't appreciate Zoom. And I could go on and go DocuSign and these other stocks where you're like, man, the fundamentals look great, but the market just doesn't want to buy into small caps. It's the same thing with airlines. The market doesn't like airlines. Some auto companies, market doesn't like auto companies. So I think having a realistic sense of some small caps are going to light the world on fire. And if you catch those early, wonderful. You're going to be on a rocket ship ride. But they're just harder to find.
Mm-hmm. Yeah, for sure. Especially the ones with the Chinese hustle gameplay behind them. I don't know if you've heard about that documentary before on Netflix, the China
I
Hustle.
did.
Great one. Go watch it, people, if you haven't already. This last segment or second last segment I have for you, I'm just gonna name a bunch of stocks out, and you just name or you just say a direction that you think it's gonna go to, either up or down, or you can say flat also. So starting with Palantir,
Down,
Dell,
down,
FedEx,
down,
Coinbase,
up,
Starbucks,
up,
Nike,
up.
Affirm,
I don't know.
Apple,
Down,
Amazon,
up,
Google,
up,
Microsoft,
even,
Meta,
up,
Nvidia,
down,
Tesla,
down.
Micron,
I don't know.
TSM,
Down,
QQQ.
down,
This is the Nasdaq, S&P 500,
down,
and the IWM Russell 2000 for the last one.
even.
Even. Okay, that was a nice hot up and down and flat. We only got 2 flats so far, but a good mix of up and down. That was basically the stocks that I'm going to be watching for the next week over here. So I appreciate that little quick sentiment analysis on that side. And the last one, Victor, what is your number one underdog for 2025?
Man, I want to give it some thought. Give me a second. Okay.
Yeah.
Number one underdog. Pfizer.
Pfizer. Okay, why is that?
Because if you look at Pfizer, a couple of years ago, they solved COVID through a vaccine. They went from being a $40 billion company to $100 billion. And I'm not a math major, but that's a lot. And then they dropped back down to 55. Now they're up to like nearing 60 billion in revenue. They make profit, free cash flow. They loaded up on this business they acquired because they had all this cash from the COVID vaccines. They were generating upwards of $30 billion of cash during those 2 years of COVID. And they did something with that cash. So they've loaded up their business. The market has just hated the stock, like just hated it. But their business is now beginning to grow. If they show 2 quarters of growth, solid growth, the stock could double, triple in 2025.
With Pfizer picked as the underdog, what would you pick as the most? It's not the underdog, and then there's the favorite. So what would you say is the most favorite that's due for a pullback?
Oh man, Apple.
So, ladies and gentlemen, there you have it from the one and only Victor H. Investing. His underdog for 2025, Pfizer, and his favorite, meaning the most expected to pull back, Apple. Will obviously love to have Victor more down the road. Victor, let him know where to find you on the YouTube and where else you stream, and go ahead.
Yeah, primarily on YouTube. It's Victor H Investing, space between Victor H and Investing. We have a really good Discord going on, and how do I define really good is there's solid conversations around stock and investing in particular sectors. Nothing of whatever I say is, financial advice. It's just an investor giving his opinion and experience. But when you get like 30 investors that are doing the same thing, collectively, you have all that knowledge and wisdom together. So the Discord's really taken off nicely. Of course, there's scammers on Discord, which sucks. But you can watch my videos on YouTube. That's the principal platform that I stream. And then Discord is where I'm probably most engaged with investors.
Awesome. Thank you, Victor, for today. Looking forward to more fun co-streams like this and expanding my investing knowledge with the help of you and your community. I'm in his Discord, ladies and gentlemen, and I'll be pretty active in there too. So come join us in his Discord. If you're interested in any of my links or any of my sponsors, their links are all down below. And I'll also tag Victor's links in the stream description down below so you can find them easily down there. Until then, ladies and gentlemen, you know my stream schedule, Monday to Thursday, 8 p.m. And Victor's streaming schedule, I believe, is Monday to Friday, 9 a.m.
That's correct.
Monday to Friday, 9 a.m. So catch him on his streams. I'll be in his morning chat every morning. You'll see me saying good morning, Victor, as I'm getting ready, watching stocks moving and so on. So catch me in his streams in the morning at 9 a.m. Catch me in my streams at Monday to Thursday, 8 p.m. And obviously Sunday, 6 p.m. Looking forward for a lot more fun together. You guys have yourself a great Sunday evening and have fun with the rest of the football. Thank you for coming, everybody. Bye-bye.
Thanks, Brad.